Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is October 4 and we're starting from Euro-Dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. But their decline became limited because of the first test of 1.0470 coincided with a sharp drop of the MACD line from zero. As for the second test, it happened when the MACD line went in oversold area, prompting a buy signal. This resulted in a price increase of around 15 pips. Pressure on euro returned after the movement. The empty macroeconomic calendar, together with the speech of ECB board member Philippe Lane, prevented an upward correction. However, the situation may change in favor of buyers today as long as the reports on the Eurozone services sector, PPI, and retail trade volume exceed expectations. The speech of ECB President Christine Lagarde may also have a positive impact if she takes a more accommodative stance on interest rates. Buy euro when the quote hits 1.0492 and take profit at the price of 1.0540. Growth will occur after good reports on activity in the Eurozone. Note that when buying, the MACD line should be above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0457, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0492 and 1.0540. For short positions, sell euro when the quote hits 1.0457 and take profit at the price of 1.0417. Pressure may return at any moment, especially in case of weak Eurozone data and firm comments from Lagarde. Note that when selling, the MACD line should be below zero, or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0492. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0457 and 1.0417. The next stage of our review is the next major, GBP USD, presented by Sebastian Seliga. The GBP USD pair has made a new swing low at the level of 1.2051. So the levels of 1.2109 and 1.2119 will now act as the technical resistance. The key technical resistance is still located at the level of 1.2271, and only a strong and sustained breakout above this level would change the current situation to more bullish. Please notice that despite the possible pullback, the mid-term outlook remains bearish due to the bearish cross of 50 and 100 DMA on the daily timeframe chart, and the momentum on the H4 timeframe chart is still weak and negative. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapas. Early in the European session, gold is trading around 1820. Below the 21 SMA and below the downtrend channel formed earlier this week. gold registered a new low around 1815, and from that point it has made a rebound, but without the strength to consolidate gains. The chart shows a recovery in gold, but there is strong downward pressure which prevents gold from its further recovery. According to the 1-hour chart, we can see that on October 2, gold left a gap around 1849. Technically, there is a strong possibility that gold will return to this level and cover the gap in the next few days. For gold to reach 1849, the key will be that the price settles above 1827. Then it will be seen as an opportunity to buy. This daily pivot point is located at 1823. If gold consolidates above this level, the key will be to wait until it continues trading above 1827. Gold is likely to reach 1849 in the coming days, but we should wait for confirmation above the 21 SMA and above 1827. In the chart, we can see that if gold continues its downtrend, it could reach 1812, around 2.8 mirror level. If gold reached this point, a technical rebound could occur. On the other hand, above 1827, the price could recover and reach 1869, where the 200 EMA is located. Our trading plan for the next few hours is to buy gold only if it trades above 1827, with targets at 1843, 1849, and 1869. The Eagle indicator is showing an overbought signal due to the strong technical rebound. But after a bearish signal, it's likely to resume its uptrend. And now it's time for USD-CAD currency pair. Petar Yakimovic describes. USD-CAD has been trading sideways today at the price of 1.3700, and there is potential for the breakout mode. In case of the upside breakout of the resistance at 1.3733, there is the chance for the rally towards 1.3800. In case of the downside breakout of the support at 1.3680, there is the chance for the downside movement towards 1.3600. What about cross-currency pairs? It's AUD-JPY. Arif Makmur presents. If we look at the 4-hour chart of AUD-JPY cross-currency pairs, there will be a deviation between its price movement with stochastic oscillator, where these give the clue that in the near future AUD-JPY will appreciate rally above to the level 95.33. If the momentum as well as the volatility quite supporting, then it's impossible for AUD-JPY to continue its strength back to the level of 96.16. Unless, if in the way to those levels suddenly there is the downward correction to the level of 93.07, then the upward rally scenario that has been described before will become invalid and automatically cancel itself. And finally, here's Laurie Bailey with AUD USD pair forecast. Let's have a look. Yesterday, the Australian dollar lost 62 pips and reached the key support level at 0.6295. On the daily chart, the Marlin oscillator isn't prone to fall further, so the price could correct higher and return to the 0.6388 and 0.6514 range. However, if the price firmly consolidates below 0.6295, it may fall towards the next key support level at 0.6171. Today, US PMIs will be released, and they could provide the initial impetus for further developments. Crucial US employment data will be released on Friday. On the 4-hour chart, the price is currently moving below both indicator lines, and the Marlin oscillator suggests the potential for a corrective reversal. The price could reach the target level at 0.6388, which is approaching the MACD line, even without risking the downtrend. If the price firmly settles above 0.6388, the Australian dollar may rise further, with a target at 0.6514. That's all for today. See you online soon and good luck.